Nike reported earnings last night, and during the pre-market this morning, price was up. Company reported 94 cents per share and 12.94 billion in revenue, beating analyst expectations. Nike also reiterated mid-single-digit full-year revenue guidance. Nevertheless, the stock sold off. So before we continue with the analysis, let's look at this video as it goes into detail regarding the Nike earnings report.
Nike out with its first quarter results, and if you look at the earnings per share number coming in at 94 cents, that is versus the 75 cents that analysts had been estimating from the company. Revenue in the fourth quarter up 5% to $12.8 billion. That's if you don't look at it currency neutral, up 8% on a currency neutral basis here. And so that means revenue overall at $12.94 billion is basically in line with estimates, maybe a slightly shy of estimates here. Greater China revenue, on which there was a lot of attention, $1.74 billion short of the $1.83 billion that analysts had been anticipating here. Gross margin, 44.2%, which is a bit better than estimates, although it is down year over year, down by 140 basis points here. So some interesting stuff in these numbers, Josh, as we look at them. A lot of attention on that China number, a lot of attention on inventories, a lot of attention on wholesale numbers as well.
Yeah, so the stock is popping about 1.6%. So at least initially here in the afterhours, of course, as we were talking about, it had gotten so beat down, Julie, heading into the print. I am very interested in China. I think that's a big market for Nike. Where's the business now and where is it headed? We know China's economy is weak. It's sputtering. I think this is a great read, perhaps, on the Chinese consumer. There is competition in that market, too, not just, the domestic brands, the home team, but also big brands like Lululemon have moved in. So very interested to talk about China and the cross currents there.
Yeah, just to break down those China numbers a little bit more, I'm looking at the currency changes year over year in those revenues in China. Footwear revenue up 22%, again, the effects of currency. Apparel up 36%. Equipment, it looks like, up 19% there in China for that number. Now, I was mentioning the wholesale numbers, which I want to highlight as well, because Nike has sort of went all in on a direct-to-consumer strategy over the past few years and then backpedaled on that a little bit, and is still doing a lot of sell-through through places like Foot Locker, which we've heard some sort of not-so-great signals from as of late. Wholesale reported revenues, $6.7 billion in the fourth quarter. That's down 2% including currency, up 2% on a currency-neutral basis. So, not seeing amazing wholesale numbers there. Inventory about flat year over year, and a little bit lower than what analysts have been anticipating. So that actually might be a little bit of a positive number.
It was interesting. I mean, heading into this print, there were analysts who were taking down their ratings because they were worried about the consumer. These storm clouds that were brewing, and their idea was, listen, to the extent that consumers start getting a little nervous, probably footwear apparel would be the first things they cut.
Right, but will it be Nike footwear and apparel, right?
Yeah.
Does it have such a cachet?
It's a strong
that it is
brand.
More resistant.
On the other hand, not cheap, Julie.
Not cheap. That's true. Although there's a big range of prices for Nike merchandise, it is true. So let's get more on all of this here. Again, Nike earnings per share beating, even as revenue sort of coming in line, slightly light of estimates. David Swartz is joining us now, Morningstar equity analyst. So, David, first of all, just give us your big picture impression here of this Nike report.
Looks like the sales are pretty much as expected. Came in a little bit less than expected, but 2% growth is pretty close to what I had. I think I was at 2.2%. It looks like that by region, the Greater China sales were a little bit higher than I expected, up 5%. My estimate was up 2%. Looks like North America was soft, but that's not a big surprise because we have seen a lot of slowness in apparel sales in North America, especially in department stores recently. And it looks like, again, the standout region for Nike was EMEA, up 8%. That was higher than I expected. And that region has really done well for a lot of multinationals, much better than expected, given that we have the war in Ukraine and other issues. So all in all, the sales look pretty good. Margins look a little bit better than expected. Gross margin looks like it's about 50 basis points above my expectation. Now, Nike has a history of consistently beating margin expectations. And so, I think there's a little bit of sandbagging that Nike tends to bring down expectations to make it easier to beat them.
So as I mentioned in the pre-market, when the stock opened up at 9:30 a.m. Eastern Time, that was the opportunity to short the stock. And here we have on the weekly chart, not the greatest, but we do have a weekly seller's level. At the 101 level. Now, I personally missed this trade opportunity to short, such as life. We do have also support in the past, which should be resistance moving forward. Again, fortifying that opportunity to short the stock. Scrolling out to the monthly chart, I'm looking for Nike to trade down to the $85, $80 level. This is the pandemic lows of 2020. So I think we have more room to go down. As you can see, the gap higher, but the sell-off, I definitely think that price will fill that gap. Now, would I short it now? Well, I would not personally. I missed out on the $5 move to the downside. I would have bought puts, but nevertheless, this was definitely a short the news event. Again, the monthly chart tells you everything that you need to know. Lower low, lower high, lower low is yet to come. Thanks for watching. Subscribe. Please like the video.